Welcome, everyone. Thank you for attending. And the topic for this podcast is everybody and their brother are going after the most attractive realistic asset class, single family home residential investing. Once again, thank you for attending. My name is Seewing Yee from the Yee Real Estate Network, and my co-host is Maureen McCann from Spartan Invest. Welcome.
Thank
Maureen.
you, Seewing. Nice to see you.
Very, very good. So with that in mind, let me share the screen. And here it is. So everybody and their brother, sister, friends, coworkers, whoever are targeting the most attractive real estate asset class in history, which is a single family home residential asset class investments. All right, so without further ado, before we begin, and one of the reasons why is just to reiterate, because single family home residential investing is an ideal investment. It's history's most powerful and proven multi-dimensional real estate asset class, and it's the most tax-favored asset class among the peers. And because of this reason, so Maureen, can you quickly go over what we mean by multi-dimensional?
One asset earns you in multiple ways, in short. So cash flow, equity growth, loan paid down, depreciation, it's that tax benefit you get. So you earn with one rental property, you earn in all of those ways. Also, it's a great hedge against inflation because you can increase the rent over the time that you own that property against a fixed rate payment for that 30-year fixed note. It makes a lot of sense long-term on how you beat inflation and how you earn in multiple ways.
Absolutely agree. Absolutely agree. So with that in mind, with that in mind, we can talk about this. Follow the Wall Street money into the main street. So why? Okay, Wall Street and stock market for the past century or even longer, they are allowing Americans to take advantage of the monetary system and investing in the stock market. So what comprised of Wall Street? As a matter of fact, I'm gonna support what they're doing. I mean, a lot of real estate people, they ridicule Wall Street for trying to enter the real estate investment game. I'm going to tell you, I'm going to go the other way. Okay, I will share with you why we need to follow what they're doing. Why what they're doing? Because for many years, Wall Street, they hire the best people to do these kind of things. They hire Harvard MBAs, from Harvard Business School, Stanford MBAs, and all those smart analytical geeks out there that can crunch the numbers, right? When they crunch the numbers, right, they look at cap rates, return on investments, the yield, and what have you. So actually, maybe like 15 years ago, right after the real estate crash, I should have created a slideshow for it. Warren Buffett, Maureen, Warren Buffett, the Oracle, the most famous investor out there, Mr. Warren Buffett. Back then, he said, if I could find a way to buy thousands of the single-family homes, I will buy them because I don't have the resources to how to manage all these hard asset classes. That was 15 years ago, right after the crash. Guess what? Now, Wall Street have figured out a way how to monetize, how to efficiently to buy whole bunch of single-family homes and turn it into and make a good return out of it. So we could talk about that. So let's follow the money. Follow the money. The movie. Tom Cruise. I'm sorry. Show me the money.
Show me the money. Wall Street's figured out the money's in real estate.
Yep, exactly. So single-family homes asset class has been attractive, or will be attractive for mom and pop investors, that people that Maureen and I are targeting. But the big players are jumping into this game, and the big players in what they're doing, they are as we speak, they have like 40 billions of assets to venture into build to rent model. So the build to rent revolution, if you will. So this hedge fund, these institutions, these corporate raiders out there, they have, as you can see, chunks of money, and they're entering into good, affordable neighborhoods in the especially in the Sun Belt, Maureen, right? They are buying a whole bunch of subdivisions, hundreds of homes at a time, single family homes. They built them with their own money and they rent it out, you know. And then those markets are like in Las Vegas, in Phoenix, in Atlanta, Georgia, in Orlando, Florida, and in Dallas, Texas, and Raleigh, North Carolina. All these very good, fast-growing, medium-sized cities where they're building this portfolio to rent it out for renters, and they're making a killing. So Toll Brothers, and we'll discuss who they are. Lennar, for example, they have $4 billion worth of houses. So Wall Street firms are buying up single-family homes, and a $60 billion housing grab by Wall Street. Right? Okay. BlackRock, you know about BlackRock, you know about what's the other company that are venturing into Florida? You just mentioned to me. JP Morgan, is it?
Oh, no, Goldman Sachs. Goldman Sachs.
Okay.
Yeah.
So tell me about Goldman Sachs, what they're doing.
So what I understand they are doing is they basically were focused on the single family market, and in a community in Florida, they purchased $45 million worth of single family homes to use those as rentals, much to the chagrin of the local residents in this particular community. Very upset that you guys can Google and find out, the community and what's happening there. But it speaks to your point, Seewing, that Wall Street is looking to find ways to, create more wealth, create more cash flow, and they are betting on the single family housing market by billions of dollars.
Well, Maureen, let me ask you this. Now, for the purpose of our audience understanding this. Now, like I said before, they have crunched the numbers. They have looked at the yield and all that. So they determine based on current market condition, they're targeting single family home, just like you and I, just like our investors, our mom and pop investors. When when our mom and pop investors buy the single family home for investment purposes, we look at rent to value ratio, we look at the cap rate, we look at the cash on cash return, just numerical metrics, the cash flow. So Wall Street is doing the same thing. They just do it in a bigger piece of the pie. So what do you? So what are your thoughts? I mean, how Wall Street are looking into this?
So I would say use that as a barometer to see, when you're looking. I mean, think about this. We are in a time right now where there's some uncertainty, right? Some economic uncertainty. Where are the big guys putting their money, right? And it's kind of like, if you know where, success leaves clues. And if you're following what the big boys on Wall Street are doing, then why not just duplicate exactly what they're doing? Because they've paid interns or whatever to crunch the numbers for them. So they understand that the yields are there more so than in some other areas or other sectors that they could invest their investors' capital in. And instead, they are choosing the single family rental market as the asset class where they are putting billions of dollars in. So I would just say you don't really need to go do all this hard research. Just follow what the big boys are doing and do what they're doing,
Absolutely. And there's a pros and cons of what they're doing. In fact, let's share the pros and cons of what's happening. So here's what's happening. Okay, national builders are building more expensive homes, And some of the national builders are partnering with Wall Street to build those build to rent communities over the country. And so national builders, you know who they are. D.E.A.L Horton of the world, the Lennars of the world, the KB Homes of the world. When they're building new constructions, they're building homes for around 400,000 to $1 million or more, right? And these builders are building mostly for primary home buyers, not for investors for the most part, right? Therefore, fewer entry-level homes are being built because according to the builders pocketbook is a low profit margin. They make more money by building larger homes that cost more. So, and then as a result, first-time primary home buyers are affected the most by this. And the next comment I'm making is affect our space, in that with investors, mom and pop investors that you and I, your company and my company are working with, they're having trouble buying these kind of new construction homes for rental purposes because those national home builders, they do not allow investors to enter their community. But there's a solution for that, okay? We have Spartan Invest have the solution for that, by the way. Before we get to that, let's talk about something else. Not only Wall Street are entering the marketplace. In fact, Wall Street, ever since the crash, they have entered all these markets. By the way, Florida is also, I forgot to mention, Florida also, a lot of people, or Wall Street are entering the Florida market. Now, foreign investors, similarly, foreign investors are re-entering the US real estate market. We know why I say that, because during the pandemic, because of travel restrictions, they're unable to come into our marketplace and to buy homes. But now the COVID restriction has eased travel. So a lot of investors are, as we speak, are re-entering the market, mainly in Florida, South Florida, Miami marketplace. They cater to South American buyers from Brazil and a few other places in South America because close proximity of Florida from South America. Then Canadians are buying all over the place in the snowbirds up in north. They always come to Florida and Texas and a few other Sun Belt markets and buying vacation homes and buying retirement homes and what have you. So and also foreign buyers, real estate market, U.S. real estate market has always been a quote unquote safe haven for them because of the political unrest and other real estate risk associated with their home countries, whoever they are, China or Japan or Australia, wherever they come from. So plus U.S. estate market is houses are much cheaper than housing markets in other parts of the world, believe it or not, much cheaper than Korea and China and Singapore and Hong Kong, Japan, all those countries. So if people think, Americans think U.S. real estate is expensive, if you compare to other parts of the world, U.S. houses are extremely cheap. Am I right, Maureen?
They are, yeah. I would agree with you 100%. Also, the 30-year fix is a U.S. It's a U.S. only offering, whereas if you've got a higher price property on a shorter term, 15, 10 year, it makes those monthly payments really high because the price of the real estate is so high in those countries.
Oh yeah, something we failed to talk about. This amazing wealth building vehicle, the U.S. 30-year fixed rate mortgage. Foreign investors in foreign countries, if a person who live in other part of the world, when they buy real estate, oftentimes they have to pay all cash. If they try to get a loan, it'll be the loan is higher interest rate, and much higher down payment. So for us to live in the United States that can qualify to get 30-year fixed rate mortgage to finance an investment property, you should not take this for granted because people are jealous of this powerful wealth building debt induced destruction type of 30-year fixed rate loans that investors have. So investors out there, Maureen, you and I need to tell our investors, you are spoiled. You have you have so many powerful ways to build real estate wealth using leverage and with a 30-year fixed rate mortgage in other part of the world are not privy to. So, wow. Okay, here's my slide. Mama pie investors looking for solutions, right? So, Maureen, your company have a true solution that can overcome this competitive nature of bidding for this limited supply of single-family homes in a good part of the country, in the Sun Belt, mainly southwest of the U.S. and southeast of the U.S., in which your marketplace, Alabama, Tennessee, and Georgia, are kind of located mostly in the Sun Belt world. So you guys have come up with a solution instead of if real investors want to have to buy a new construction home that are affordable, they don't go to national builders. They go with local builders that can build those low-cost homes strictly for the investors. Yep. So that's what you guys are doing with Spartan Invest. So tell me about the value add and the new construction properties that you guys have that can overcome all this competitive nature of investing in single-family home, new construction homes.
Yeah, well, on the new construction, we recognized, so we started building new homes about almost 3 years ago. And that's because we recognized that there was a housing shortage, that we recognized that there are a lot of the entry-level first-time homes were not really being constructed because it was really sort of, if you just sort of follow the data, you'll recognize that in 2008 or post 2008, a lot of home buyers went out of or home builders went out of business, or they switched to just building more luxury brand hotels or houses because you just couldn't. As a home, think about how hard it was to be a home builder in 2008, 9 years following. You had so much inventory already on the market that you could buy for cents on the dollar that it didn't make sense to build a brand new home that would just cost a whole heck of a lot more. So a lot of builders went out of business or went into something different, or they went into the luxury brand like you talked about in the previous podcast, where they were building homes, 400 to $1 million plus, because the profit margins are better there than on the entry level home. So we recognized that was an issue and started new construction for the primary homeowner, as well as build to rent for investors. So we took that approach, and we're going to continue to move that approach. And just so you guys know, we're also, we've been in business for almost 10 years now. And the first, several years were all just the rehab properties. Because there's the value add there is you add the new roof, the new HVAC system, the new water heater, upgrade electrical and plumbing, all new hardscape throughout. So all new flooring, granite countertops. So the same materials that we use in our new construction are the same exact materials that we use in our rehab properties. So we went, we continued on with our rehab of existing properties, but then started adding the new build to rent or new construction because we see there is a need for housing. There is a shortage, especially on the entry level type product. And we are shifting to a 50-50 split, meaning we used to do 90% rehab, 10% new construction. We're going 50-50, 50% new construction, 50% rehab, just because we know that the need for housing is so great.
Well, Maureen, with that said, as you know, I promote many other markets in the country for the past 20 years. So I have a high level understanding of what kind of products out there. So let me compare this example that we are looking at. to the other apple to apple comparison with other builders, other investment homes that are available for sale at the moment, I could honestly tell you objectively that this very house, this type of new construction that you guys are promoting with Spartan Invest, look at this, $250,000. New construction, 3-bedroom, 2-bath, single family home, around 1,300 square foot, rents for around 1,650, what have you. I mean, in a good areas in the suburban market, the path of growth in Alabama and mainly in Alabama, your new builds, soon to be other markets in the region that you guys are promoting in Tennessee and northern Georgia. But if I look at the other competing product of new builders building for investors in other part of the country, whether not in Texas, you're not going to get this price in Texas. You're not going to get this price in Florida or North Carolina, South Carolina, and Georgia, because this price point, this square footage, the way it is right now in other markets is way higher than 250,000. So if you look at other competing builders, there are very few national builders in Alabama or Tennessee or Georgia that are willing to build this affordable product, 250K for investors. So for you to align yourself, for Spartan Invest to align yourself with a local builder that built such a high value add, low price point, 250K and rents for 650. That is investors, when they come into your marketplace, to you guys, they need to understand that, because what they're getting is something that at least I have not seen. Okay, let's talk about the other Sunbelt areas like Southwest. If you compare this product, the square footage in Las Vegas, new builds in Las Vegas or Phoenix or Utah, or Boise, Idaho, this house would cost $500,000.
Easily, yeah.
Easily, and you can't rent it out because the rent is only like $2,500. So for any investors that want to buy new builds of this square footage in this nice location in Alabama or in Tennessee, what have you, they're not going to cash flow because the number is not going to work. So as smart investors will understand the numbers, the rent to value ratio, the rent in this case 1,650 to value ratio 250 with 25% down payment at 6%, you'll cash flow a little bit. Investors are not going to cash flow with a 25% down on a similar product with the square footage. Like I said, you're buying a 500K product that rents for 2,500 maybe in other markets all over the country in the Sun Belt. So that's a little bit endorsement.
Thank you. I'll take it. But it's just, I like what you're doing here, because you're really just kind of sharing what similar product is out there in other markets, what those price points are, what the rents are for those markets. And in some markets it works, in some markets it doesn't, just because of how quickly prices have escalated over the 24-month period. What's nice about this price point of 250, I mean, our new builds are from 230 to 250, similar square footage, 3-bedroom, 2-bath with a 1-car attached garage, in really nice neighborhoods. It is a harder product to find at that price point outside of the Sun Belt where we do business.
Absolutely. So Maureen, to recap this presentation right now is we can conclude after this recap, and we should be done for the day because you're busy, you got other things going on. So so the recap for this presentation is everybody and their brother and other many relatives and friends that want to enter the single family home new build marketplace, new construction, the value add, new builds, like you have 1-year warranty, maybe 5-year warranty, 10-year warranty. The maintenance issue will be very minimal. You could attract the highest quality tenants, of course, for new builds. You can charge more rent. The house gonna last a long time. There'll be a very little deferred maintenance. So that's what investors want, right? They want less issues with their investments over time. So my recap is historically, single family home has been the most attractive asset. There's a lot of competition out there. So when an investor aligns themselves with a mom and pop investors that you and I work with, align themselves with a reputable turnkey providers out there, such as you guys, as Spartan Invest, they can bypass the Wall Street hedge funds, all the institutions, corporate build-to-rent models. They can bypass all that thing and come right to you to build their wealth. So what is your recap?
Well, I would agree with you. I like the title of this, which is Everyone and Their Brother is Going into the Single Family Rental Space. And it's really difficult. It's more challenging for investors who are like us that are just wanting to, pick off 1 or 2 or 5 properties and competing with, $45 million or $60 billion, from the Wall Street cats. It's a little bit harder to compete or get into those products with, because think about it. I mean, if here I am a turnkey operator, I'm a turnkey business, and somebody comes to me and says, hey, I've got $45 million, I want to buy all your inventory. Well, I don't have that much inventory available for them to buy at that moment, right? So they're going to move on to the home builders, which is what they're doing. They're teaming up with home builders to go into contract and say, if you build 60 homes, we'll buy them all for this much, right? They're working those deals with those home builders. That really kind of puts the mom and pop investor in direct competition, but it's really no competition because it's not going to be able to get into those types of products. So you find local home builders that are serving a need, that are providing brand new construction or build to rent for the investor. It would be for an investment property, but for the primary homeowner, we're serving that community too. So we're twofold in our approach to the new construction. Because it is needed. There's not enough home builders in the entry-level space. So we're just kind of filling that need to help investors and primary homeowners achieve the dream of owning a property as a primary homeowner or as an investor who wants to buy new, defer maintenance for as long as possible, get a really decent rent, good cash flow, and then ride that equity wave, you guys, for the years that you hold the property, because that is, just one of the multiple ways that owning a single family rental property pays you.
Very good. Very, very good recap, Maureen. So can you, although my YouTube channel will have your contact information at the bottom, but would you care to verbally provide your contact information for people out there that want to reach out to you and Spartan Invest to take advantage of that limited amount of new builds, cash flow home you guys have available?
Thanks, Seewing. Yeah. So the best way to contact us is SpartanInvest.com. There's a contact form. You can ask for a request to speak with one of the representatives here. I'm one of them, so I'd be happy to reach out to you. I know Seewing's got my email address, McCann at SpartanInvest.com. You can reach me there too. Love to show you the product that we have, the price points that we have in the really nice neighborhoods. So if new construction is what you're interested in, then Seewing has brought you a very reputable company to trust and to look into investing in.
Absolutely true. Thank you so much. I think we need to call it a day. Right now is time is precious, and you got people to see, things to do, places to go.
Well, you know what? Whenever you invite me to participate with you and co-host with you, I don't think I've ever turned you down once, because I know that we are aligned in our mission and our goals. We are aligned on the coaching side and providing relevant, factual information to investors, because we want investors to be successful.
So much, Maureen McCann. Thank you for attending. Have a nice day, everyone. Thank you. Bye-bye.
Bye.